Jonathan, thanks so much for your time. Let's take a look at just how much stress Uchumi is under at the moment, where we still have payment terms being owed to banks renegotiated and debt still sitting with suppliers and government as well.
Well, we have gone through big hurdles, and currently we have already agreed with a number of stakeholders. The first one, of course, are the bankers. The bankers, we owed them close to 1 billion shillings. Now, as of January, we owe them just barely 100 million shillings. That is approximately 1/10 of what it was. In terms of suppliers, the current suppliers, since the company went into receivership, we have completely been in what I would call very good books. We have paid them everything regarding the current supply, so we are in terms, and probably one of the best payers within the sector. In terms of the old debt, we had agreed during the receivership, or slightly before the receivership, that the amount of 25% of what we owed them, that's about 190 million Kenya shilling, would be converted into ordinary shares, which in fact it will mean that the balance sheet will have an improvement in terms of its liabilities. In terms of the government, we owed the government. The government granted what you'd call revival loan of 675 Kenya shilling millions, and including the accrued interest since then, 3.5 years ago, that comes to 857. The government has agreed, subject to the shareholders approving, which they approved last Friday, to take into account that they can convert into ordinary shares and the other one into term loan. On Friday was a milestone because the shareholders came in and unanimously agreed that the three main issues that we call special business be taken into consideration in the way that the CEO had provided for in the board meeting. That is the first one, that we can negotiate as a board with the bankers that we restructure the loans, that is the secured loan. Then number two, that the debentures that we had issued to the shareholders and the suppliers equal to 477 million shillings may be considered, or actually should be processed into ordinary shares. And thus the government loan, which is close to 350 million per application, would also be considered into equity. That brings what you call equity boost into approximately 830 Kenya shillings millions. That's close to about $1 million. That brings the company to what I would call positive shareholders funds. Yeah. We have already been earning profits in the last 3 years, so it shouldn't be any problem. So lifting of receivership and the conditions put in by the bankers have been met so far.
Well, we certainly have quite a few eagerly anticipating the return of Uchumi to the NSC, and seeing that the company is in this position. I mean, let's take a look at some of the investment merit in your books as you see it, and why current shareholders shouldn't simply cash in their chips as soon as the Uchumi Supermarkets comes back to trade.
What I would say at this point in time is that we have a lot of inquiry in terms of Uchumi shares for those who don't have it, mainly because in the last 8 years they had not made, for the first 6 years before receivership, they had not made any profit. But the turnaround has brought in what I would call a windfall for the shareholders who were there at the time that the company went into receivership. We have, in fact, probably something like 700 million shillings profit in the last 2.5 years. That in fact means the money that the shareholders are putting in are closely equivalent to what they have earned. What I would say at the moment is that once this conversion of the debentures that we had requested the shareholders to pump in are converted into shares, definitely we'll get into the market. There is a very high what I would call appetite in terms of the supermarket, because it is not something you can hide when a supermarket is performing or not performing.
Well, certainly, I mean, we've had other market players agree that you have been performing well. I was talking to Ali Khan Sachu, CEO of Rich Management, a little earlier this morning, and he says that you've certainly played a good game of defense. It's now time to get back on the offensive and play aggressively moving forward at a time when you've got heightened competition and a little bit of weight on your balance sheet moving forward. Just how aggressive can you afford to get, and what level of expansion are you looking at?
This is what I would call cautious approach and intelligent competition. We do not run after any competitor, we run after our customers. That has been one of our mottos. Let me put it this way. During the receivership, I had two roles to play: business development, in addition to getting the turnaround. The business development is the one related to medium to long term. As we are talking, we have managed to clinch deals with developers in those areas that actually are very, very, very lucrative. The Uchumi also went into what I would call the strategic adjacencies, where we said we are going for customer numbers that are going to drive the product range, that are going to drive the growth. Now, we have managed to achieve the customer numbers from a bare 7 million customer a year to 20 million today within 3 years. So what we are saying is, in spite of the competition that is there, we are cutting our edge into the areas that we know best, and not just in Kenya, but within the region. Kenya, Uganda, and Tanzania, because we are already in Uganda and we are enhancing our stand there. So it shouldn't be a big deal.